Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, March the 18th, the year 2019. Let's talk trading. How to trade like a pro. Trading versus picking. I got something in my inbox the other day about picking stocks, picking the movers, the trenders. And I started thinking, and actually, I was laughing because that's what so many traders become. They become pickers. They're not really traders. At least that's my opinion. And when I first started out, I was always looking for the hot stock, the IPO, the next Amazon or Netflix, or, what was hot, what was moving. Back then, I guess it was Taser and Apple and Google when it came out. And we were looking for all these stocks that would go up real quick, right? But actually, when Google came out, I think I was long past that, what I call, stock de jour or trade de jour, the trade of the day. And I just found something that fit my criteria, the milk the cows using the buy zone. And I just traded that same stock over and over. I mean, I traded Taser, I think, for a solid year, and then Apple for like a couple of years. And before, I forget what it was before then, but I mean, I would just trade the same stock over and over all day long. And I think you've seen that my videos. What was it? A couple of years ago, it was every day the dollar yen. Then things changed slightly with the dollar yen. Actually, with the whole market, we didn't get the trading ranges, so I switched over to euro yen, and that's pretty much all I trade. That's why I don't switch screens. I mean, but the thing is, no matter what instrument, gotta have your risk and money management in place. You just have to, especially if you're going to switch from day to day, because you might wind up trading something you haven't traded in a long time or never traded at all, and you have no clue to the idiosyncrasies of the price action of that pair. And let's take a peek here. As we can see, the euro yen entered the upper wick zone of the previous week's candle, and it actually popped out. Let's see, it had a 68 high, and the previous week's high was a 56. So it gave, 10 or 12 pips? Not a bad trade. And you can see here we still have 1, 2, 3, 4 gaps to fill in case you haven't traded those. And remember, on the weekly here, inside bar. But look, here's all the pairs. I mean, there's more, the really crazy ones, but out of the main currencies, these are the pairs, the main currency pairs. And of course, every day, we might have a different mover. And we'll see that in just a minute. On the year, we've got another green day here. 1, 2, 3, 4, 5, 6, 7 green days in a row so far. But the month, we're still 10 pips below that monthly open. And as you can see now, we've pushed the high into the range of the first day of the month. We pushed a high there, but you can see we fell back out. So right here, the low of the first day of the month, that short, right now it's worth 7 pips. But once again, trading out of the opening ranges for the year, the month, and the week. And once again, we tried to get above, and we actually did get above, but we couldn't hold above 126.62, which is the opening price for the month of March 2019. And you can see here, once again, didn't make it through. But we did also, once again, we broke out of that inside bar on the week, which happened last week, but we're back in it. So once again, we are looking to go long at 126.56. Larry live trade. Though with 6-7 green days in a row, I might be looking for a buzzard reversal. For those of you who remember the buzzard reversal, I'll let that be your homework. So see if you can. I do believe there's a video out there on it. Only 49 pips range. You can see here we've got 3 pairs over 100 pips, all pound pairs, with the new beast clocking in at 165. A couple hours ago, we put in a high for the day, and we had a highest open, and prices pulled back off that highest open. Buy zone, same as last night's video. Pivot point inside the buy zone, so no pivot bias. And you can see price gave you a couple opportunities, and we're still above. Actually, it looks like you should have taken profit based on price action. Red rats had a rat trigger in the rat zone, and the ship sails at 126.48. And you can see we're opening a new bar right now. So green candle closes, red candle closes, short at the low of the red candle. Once again, we took out the pivot. Got a weekly pivot, 125.75. And you can see we're above that. And I think I need to expand these out. Monthly pivot, 125.89. Weekly, 125.75. See if price revisits this area this week. Missed pivots. You see right here, we had a missed pivot, but price took it out. So that pivot's been covered, leading these two from March and these two from January. And these two from last year. Price action. 3 ball at the top, red at the line, pro trade, and you can see there was a few pips. Or simple price action trade, from the breakout between 60 and 70. Price broke out, so came to 50, actually broke through and pulled back. Simple price action trades. And so rather than try and pick what's moving, you sit, you watch, you wait, and then you act at the appropriate time. And you see what happens. Now, one other thing is, you see where price is, you could put in pending order. You could put in pending sell, pending buy, and see what triggers. We did get out of that wick zone. You can see we were in it, out. So, in and out of the wick zone. Price action trade, once again, previous day, week, month, open, high, and low. You can see here, there was a trigger, another trigger, and a trigger that really paid off, and then another trigger failing to make a new high. So as it comes down, you exit and reverse. That would have been a pro trade reverse. When I say pro trade, just for those of you tuning in, I mean a trader that's been experienced, pretty much knows what they're doing, and sees these opportunities, as opposed to a non-pro or rookie trade, novice trade. Novices, you don't break the rules of thumb, such as you only go long if the H1 is green, you only go short if the H1 is red. Keeps you out of trouble, keeps you from rushing into trades. Just be patient and wait. You can see here we've moved down, just a few pips in the past few ticks. I'm missing the blank chart for some reason. The range is still the same here in the day and the week because we're still in the first one. But you can see here we hit the ATR range right here, and then we fell out. Now, for reversal traders, this is something that I came up with. Geez, I can remember how many years ago. There was this Dr. S. I can't remember how to pronounce his last name, but he basically said that with the euro dollar, you do not look for a reversal unless it's moved 100 pips of range or more. And he was using that was his rule of thumb. And a lot of traders, look at the ATR or average range, or average ATR's average trading range versus average range. They're usually pretty much the same, but some people just like to complicate things slightly. So what I realized was, ATR, you have to feed it a number. How many bars do you look at to get your average trading range? So I thought, well, some people use 10, some people use 6, some people use 12, some people use 14. And so I wrote an indicator. Of course, I wrote an indicator. The ATR lines and it gives you a period, and it tells you start at 2 and you go up to 14. And it makes a calculation, and it figures out what the min and max is between 2 and 14. So for today, it was 2 was the min, and 8 bars gave you the maximum ATR. So we plot a range, and when price touches that range, that's when you look to reverse. Now, price can actually shoot through that range, and I've seen it do it more than once. So that's just another hint. And if you're wondering what the blue is, that is for the weekly range. So it's not what you trade, it's how you trade it. Drain the